So, Glenn, tell me about the mortgage industry and the market right now.
Oh gosh, market, at least in Florida, and I think it's pretty much the same in most areas across the country right now. It's just insane. It's definitely the seller's market of all sellers markets. I know working with quite a few of my buyers right now that are looking to purchase a home. I mean, really in any price range below 450.
Yeah.
They're struggling because we just have it's calmed down, I would say, in the last couple weeks, but over the summer it was insane.
Yeah,
We
I'm
were
sure.
seeing cash offers from investors above list price, and aggressively above list price, which, traditionally cash buyers have always felt like being able to pay in cash entitled them to having the ability to get it for cheaper.
Okay.
Or, they can offer well below the list price and still have a chance because they're not asking for any contingencies. It'll be a quick close. But I mean, I'm hearing a lot of buyers out there that need mortgages are needing to even forego inspection requirements. They're waiving inspections. They're signing addendums that basically say that even if the appraised value comes in below the purchase price, that the buyers under contract will be required to pay that difference. So it's been an
Okay.
interesting time in the
So,
market.
if there are cash buyers, more cash buyers, and you're in the mortgage business, does that affect your business at all?
Oh yes, absolutely it does. It makes it very difficult for my clients to win contracts against that. I actually do still believe that a seller is ultimately going to accept the offer that they feel most confident is going to close with the least amount of headaches. So what I do for a lot of my clients is when I know that they're putting in an offer in, I work closely with the agent and I'll ask to just reach out to the listing agent that's helping the seller and just kind of give them a call, introduce myself. It's actually not as common as you would think, but I reach out to the listing agent and let them know that, I'm all about communication, uh,
Okay.
disclose as much as I can with regard to the borrower's qualifications and the strength of their pre-approval, and just try to win it that way. But if a home is priced appropriately in this market, it seems like they're getting multiple offers, and you don't even want to waste your time putting in an offer below the list price in
Okay.
today's market.
Okay. So, since I deal with people who are trying to improve their personal finances, and for a lot of people, buying their first home is a big deal, um, I have a few questions for you. So,
Sure.
for people who are not doing cash deals, what kind of down payments do you see? What percentage of down payments? What percentage of the purchase price as down payments do you see? What's the range?
There are lots of different options. If we're working with a first-time home buyer that meets certain qualifications, such as credit score and income limits, a lot of the down payment programs are geared towards middle to low income families. They're giving assistance to those that truly need it. Um, without the down payment assistance, you could purchase a home at as little as 3% down as a first-time home buyer. If you're not a first-time home buyer, there are FHA loan program options where you can purchase a home for 3.5% down. But those are the minimums. I would say anywhere between 3 to 5% is where you'd really kind of have in your head where you want to be and what you want to save towards. And that's not including any closing costs either, which are not
so
being paid these days.
3 and 5%. But here's a question. On average, what do you see? Do you see people putting down larger down payments?
No, on average, I see 5%.
Wow. Okay.
Yeah.
So people are heavily leveraged.
Yes.
Okay.
I don't see, I would say out of the clients that I've been helping, about 10 to 15% of them are putting more than the bare minimum that they would need to.
Okay, why do they put down more than the bare minimum? Is it so they can reduce their monthly payment?
They can reduce their monthly payment. If they are in a position and able to put 20% down, they can avoid paying private mortgage insurance, which is just an additional cost that's added to their monthly payment if they're unable to put down that 20%. When I think about it, actually, the ones that are able to put more of a down payment are ones that are in a position where they're selling their current home, they're receiving a significant amount in proceeds for the sale of their home. So they're taking a bulk of that, if not all of it, to put towards the new home.
Okay. And what kind of credit scores do you see? So, for example, let's say a person comes to you. What is the absolute minimum credit score well, I guess the mortgages are not up to you, but the absolute minimum credit score that you could do anything with, and what is a much better credit score range to have?
The bare minimum that we would be able to help someone with would be 580. 580 for FICO score. Now, even if I come across these clients, I still typically encourage them to, work on the credit if we have the flexibility and time to be able to do that, because your rate is going to be higher. In most cases, you'll have additional costs that'll make a huge difference in the monthly payment. And as far as a good credit score, the highest tier really is 760. So anybody that's above 761, you're going to be considered highest tier. You'll have access to the lowest possible rates and the best terms that are available. So regardless of whether you have perfect 850, which I have yet to see in my life after thousands of credit reports, anything above 760 from a mortgage perspective is considered very good.
Okay. What do you usually see?
What do I usually see? I usually see anywhere between 650 to 680. That's primarily what I average as far as the clients that I see. Now, of course, there are always a few that are, in the high sevens, and then a couple that are below that 600 or closer to that low 600. But I would say as an average, I'm seeing between 650 to 680.
Okay. And what if a person says, hey, I have been in the workforce a couple years. I have a good job. My career's getting started. I'm saving up a little money. I'm thinking about buying a house. What should I do to get ready? What would you tell them?
First thing they would want to do is definitely put together a budget and a savings plan. Have an amount that they've determined up front And I would say start with as little as 5%. Not everybody is going to be capable of putting a 20% down payment, nor should they have to with programs these days. But start with looking at 5% down. Maybe take a peek at what the homes look like, what homes that they would feel comfortable looking at when the time comes. And depending on that price, if let's say it's a $300,000 home is what they determined is what they would want to be living in, then put together a plan that's going to start budgeting and helping you save that 5%, which would be 15,000 for a $300,000 home.
And do you know anyone who could help them get started on a budgeting plan?
Well, I would definitely think you would be someone that could help them.
That's what I was getting at.
Yeah, I definitely think
Yep.
that working with someone is important. I've kind of grown up in a family that was very budget minded, so I know that that's not necessarily the case with a lot of people, but yeah, I think
Correct.
accountability is going to be important. There definitely is not enough or any financial education that's available out there. Most people are operating off of what their parents or those that they look up to have taught them. And, you know, if nothing, nothing necessarily wrong with that, but if you're learning from someone who maybe doesn't have the most effective financial intelligence or advice, then that's the path that you're going to end up taking.
Yep. Yep. Yes. What I find is that many people grow up not receiving money advice from their parents. And the other thing is, even if their parents did try to teach them, the world changes all the time. And there are a lot of new financial products and ways of doing things now that did not exist 20 to 30 years ago. So even if your parents were in good shape and operated things very efficiently and effectively, they just may not be on top of, the latest things to do.
No. And I'll
For
I'll share
example, no
too.
one uses cash anymore. Cash is
No,
just,
no. Cash is no longer king.
yeah, I mean, cash just doesn't exist. One of the biggest challenges I have is, I would say, about every 3 weeks when I get a pedicure and every 5 weeks when I get my hair cut, I have to go get cash money for tips.
Hmm.
And, the ATM usually spits out 20s. And I actually know a few locations of where I can get $5 bills from an ATM.
Oh, I didn't
Okay.
realize they had ATMs that did that.
Yes. In Chicago, Chase Bank will let you pick the denomination of bills that you want. So, Jeremy Jenkins, 75, you joined. Do you have any questions for us about mortgages, about personal finances? James Howard Gamer, let us know. TikTok Josh, my nephew's name is Josh. So, Glenn, I have a question for you. Do you do just mortgages, or do you do other things like home equity lines of credit?
I only do mortgages, conventional FHA, VA, USDA, a lot of the standard mortgages for residential financing. I don't deal with any commercial property financing. With home equity lines of credit, those products are typically going to be found at your local bank or regional bank. Mortgage lenders don't typically offer a home equity line of credit. Now, we do work with a couple lending partners that offer basically a home equity line of credit, but it would be a first lien home equity line of credit, which just means that's the only loan that's going to be on your home. Whereas most people are looking for a second mortgage to use as an equity line so they can tap into the equity that is available in their home, but still want to keep or still have a first primary mortgage that they're making a fixed payment on.
Okay. And I know what a lien is, but why don't you tell everyone else what a lien is?
Yeah, absolutely. Well, when you get a mortgage, you're essentially obtaining a loan, and the loan is going to require collateral. So collateral is the value that they're loaning against, which is your property when it's a residential mortgage. So the lien is a legal document that basically states it's attached to the home and the amount that you're borrowing is attached to it. So if you were to default or stop paying or become unable to pay for the mortgage each month, then that lien gives the bank the ability to foreclose on the home and basically take ownership of it. Did I cover that? Yeah, I think I covered that.
Yeah, I like to think of a lien is a claim.
Mm-hmm.
Yeah, it's a place in line. Someone saying, actually, this is mine. Okay.
Yep.
So what other questions do I have for you? So you mentioned something. You said USDA and mortgage,
Mm-hmm.
and I don't usually think of those in the same sentence. I've heard of
Yeah.
FHA and mortgage, but USDA, I think of the USDA as like the eggs and milk people. So why don't you explain that to us?
Yes. When I hear USDA, I actually think of steaks, like USDA
Oh,
Select.
that's
But
right.
the USDA, the agricultural division, it's essentially a loan program that is specific to what that program considers rural areas. I can tell you that here in my area, rural doesn't necessarily mean an area where there are just farms and lots of land. We've got a city just outside of Tampa that's called Apollo Beach, Florida, and nothing much rural about that area. It's highly developed. It's a growing city, and what the USDA program allows is in those qualified areas that they've determined, a borrower can purchase a home for 0% down and not pay any monthly PMI, private mortgage insurance. So,
Okay. So that's why someone might want to get that, because before you said the only way, or before you said the way to not pay PMI is to put 20% down. But for a lot of
correct.
people, 20% is really out of reach.
Correct. Yep.
Okay. Okay. And then for PMI, just to clarify, that's private mortgage insurance. And even if people don't really care what that is, essentially it's a fee. So it's yet another cost that a person has to pay on the price
Correct.
of their mortgage. So if they put down more money, they don't have to pay it. And if they put down less than 20%, they do have to pay it. So
Yep.
in my mind, whenever I hear that kind of logic, I think, well, then we just have to do a cost benefit analysis and find out, is it worth it? But I think for a lot of people, even if it's cheaper to put down 20% and not pay PMI, they just don't have 20% to put down.
Right. Yeah, I've explained PMI to my clients as, and it is what it is, private mortgage insurance. It's an insurance premium that the borrower is going to pay, and what that insurance premium is paying for is the lender's protection against default. The lender treats the loan that doesn't have at least 20% down as a higher risk of default. So they're going out and purchasing insurance to protect themselves in the event that there's a default, if the borrower cannot put at least 20% down. And it is for the protection of the lender, but they pass that cost down to the borrower who's unable to come up with the 20% down.
Okay. So, how long does it usually take for someone to get a mortgage? What is the process?
Well, I actually have a question here. Was there PMI before the crash in 2008? There has always been PMI. There were programs, and they're still available today, where I think back in 2008, it was marketed as no PMI, but the reality is if you don't put 20% down, there is going to be private mortgage insurance on the loan, but there are many different ways to go about paying that private mortgage insurance. I know back in 2008, what was really popular was they would offer a program that basically came with a higher interest rate, because it was considered a higher risk loan, but you don't pay PMI, but your payment would be higher because of the higher interest rate. Nowadays, we have something that a lot of people don't necessarily know about, which is single premium PMI. So depending on how much you do put down, there is a calculated amount where the borrower can just put a lump sum. It's collected as part of their closing costs. And by doing that, they won't have PMI because they're essentially paying the PMI upfront.
Okay.
Okay. I don't see any other questions. And we love likes. So if you guys want to tap your screen, that's always appreciated.
Yes, indeed. Yeah.
Back to your question about the process. Once a person is officially pre-approved, I would say with us, the pre-approval process does include collecting all the required documentation, and these are items such as your recent pay stubs, your bank statements, tax returns, W-2s or 1099s, depending on what you receive. We are going to collect all those up front. We'll take a look at credit. We'll look at the information you've provided on the loan application, and we'll submit that to an underwriter for a full review. That pre-approval will be based on all the information that we have, basically just pending an address, the actual property, and title, and of course the appraisal, which is tied to the property. But once they're pre-approved and they're under contract, we can close them in definitely under 30 days. In most cases, it's probably closer to 21 to 30 days. But that also depends on how quickly we can get the information that we need from the borrower. If it's a borrower that, I pick up the phone and I say, hey, I need your latest pay stubs from 2 weeks ago, and they can get it to me that same day, we can close much quicker versus working with someone who may be dragging their feet or, takes a couple days to a week to get back the documents that we're requesting.
Okay. What are some of the problems you run up against? And what are things that people can do to avoid those problems?
A lot of the issues that we do run into that maybe changes from when we pre-approve them is when somebody changes something in their financial profile, financial or credit profile. I try to do my best to cover all bases. I've gotten to a point now where I tell my clients once they're pre-approved, like, just don't give your social security number or date of birth to anybody. I've worked with clients in the past where, luckily the deal didn't die, but they went and shopped for furniture during the process, anticipating that once they close, they'll have furniture delivered. And somehow they had credit pulled, even though the furniture company made it very clear to them and confirmed with them that there's no credit check. We don't check your credit. And I asked them, well, if they don't check credit, did they ask you for your social security number? Did they ask you to fill out a form? And of course, my buyers said yes. They asked for our social security number. They said they needed it to have that information. So that's when I learned, and since then I've started telling everybody, just don't give your social security number to anybody, even if they say, hey, there's no credit check. If there truly is no credit check, you don't need my social.
Okay, and I see. I don't know if you and I are seeing the same screens, but somebody, Big Man Spencer, is sending us likes. Okay, so tell us, why is it a bad thing to have a credit pull before the closing? I mean, someone could say, hey, I'm buying a house. I need furniture. I have to go shopping. Like, what's the big deal? So why don't you just explain that to us?
I think a common misconception with a lot of the people I've worked with in the past that have done this is that, okay, they feel as though I'm pre-approved, I'm now under contract. What's the big deal? Like, the information that you have on me is enough for me to qualify. So what would cause an issue? And what they don't realize is that throughout the process, up until they officially close and sign the documents and get their keys, we are monitoring. Any lender is still monitoring their credit inquiries. We're not necessarily repulling credit, but we are running a service, a monitoring service, where we're looking at undisclosed debt. This is to ensure that, what we've calculated as their monthly obligations, their monthly expenses, doesn't change prior to them officially closing. Now, once they sign all the paperwork, they can give their social security number to as many people as they'd like to get the proper financing for furniture or anything like that.
So people don't realize that it's not over till it's over.
Correct. Yep. Okay. They feel that I'm pre-approved. Even some, I've had situations where you go under contract and then all the updated documents are submitted back to the underwriter, and then we receive our conditional approval. They felt like, oh, we're safe now because we have the approval. But what they fail to realize is, no, we're monitoring your credit throughout this entire process up until everything is officially done.
Okay. Good.
Looks like I have a question here. Then why were the loans defaulting an issue if they had PMI? Well, this is from the same person that asked about PMI before the crash in 2008. So I would guess that we're talking around that same timeline. And ultimately what happened in 2008, which was a completely different time in the industry from what's going on today. I'll touch on that a little bit as well. But to answer that question, the defaulting itself wasn't an issue with PMI. The banks were getting what they needed. The problem in 2008 was just the volume of foreclosures and short sales. Typically, I don't know the actual statistical numbers, but on average, let's say there's 500,000 foreclosures that are filed in a year for the entire country. During 2008, it seemed like overnight everybody defaulted on their loans and everybody started having to foreclose or short sale. So these banks ended up just having an influx of properties. I know in the state of Florida, one of our biggest challenges was that because our state requires the foreclosure and short sale process to go through the courts, there were a lot of attorneys that were hired that basically delayed that foreclosure process. So you had homes where people were living there for years in some cases, but didn't have to make a payment. And so when you have that situation, what it caused was, low inventory, because those people obviously aren't thinking about selling their home. They're thinking, how long can I stay in this home without paying my mortgage? And that was the cause of the crash, the inventory issues, and then values just plummeted at that point.
Okay. Can you tell us the difference between a short sale and a foreclosure?
Yeah, absolutely. These are great questions, by the way. I love it. Foreclosures, when the bank, in both cases, more than likely the cause is going to be a borrower stops paying, or there's a major life event where they become unable to pay. We've seen this in recent times with COVID and people losing their employment, their income, or seeing drastic cuts to their income. But a short sale is a situation where you are essentially selling your home with the agreement of the bank to sell the home for less than what is still owed on the property. And the bank it's still bad, but it's not as bad as a foreclosure on your credit report. The foreclosure is you are just essentially turning over the home to the bank. The bank is taking it over and they are foreclosing and working on evicting you out of the home. The short sale process, like I said, is a little better. Both are not going to be ideal for your credit, but from a lending standpoint, if you have a short sale, you potentially could qualify for a mortgage in the next 2 years. Whereas if you have a foreclosure, you're looking at anywhere between 4 to 7 years before you would be considered qualified for another mortgage again.
Okay, so here's another question. Since TikTok has viewers from all over the place, I know you're in Florida. Do you give mortgages or find mortgages only for people who are buying in Florida, or only for people who are in Florida, or can you take on a more varied clientele?
Another great question. Personally, I am only licensed in the state of Florida currently. So what that means is I can assist anybody who is purchasing or refinancing a property that's located in Florida. The company that I work with is licensed in, I believe it's now 44 or 45 states. And I do have lending partners within the company that I can refer to, that I've worked with in the past, that can help anybody that's outside of Florida but still within our approved states list. But for me personally, to work with the client, they have to be working with a home that's in the state of Florida.
Okay. And I just have to give a shout out. I see that Wes Byron Studio joined our live, and I know who Wes Byron Studio is. So hello to Wes Byron Studio. And
Yeah.
yeah, so so just to get back to my question about what kind of mortgages you handle. So it's all about the purchase. So let's say someone's coming from another state. Hopefully all those snowbirds from the north who want to go down to sunny Florida. So anyone who's coming, oh, someone sent me a rose. Thank you so much. I appreciate that. A rose from a rose. Okay, so someone coming from a cold state who wants to get a home or a second home in sunny Florida can come to you and get a mortgage from you.
That's correct. Yep. And I do work with a handful of people currently that are looking to make the move from up north to down here in sunny Florida.
And it could be anywhere in the state. So even though you're in Tampa, someone wants to buy in like Tallahassee, which is the state capital where Florida State University is, or Miami, which is way down south. You could still help them out.
Yep. Entire state. As long as they are looking at purchasing property within the state lines, I can assist them.
Okay, sounds good. So I think we know the obvious advantages of going to Florida. Let me see, since I don't live in Florida, but I like to visit it every year. There's no income tax. Mickey Mouse is there. Sunny weather. You said low home prices. What else? You live there. Nice guy.
Beautiful beaches. I think weather has been sort of the main theme and motivating factor for the clients I've recently met and have been helping.
Alligators. Sorry, just got a comment. Do you see it?
No. I think we're seeing our own.
Yeah, you and I see different comments. Okay, someone just commented alligators. Yeah.
Yeah.
You know what?
I don't know if that's a bonus. I think that's actually
I've seen alligators in Florida. I've been I go to Sanibel Island, which half of it is a nature preserve. And if you go in the nature preserve, you see alligators. They're not large. They're about, the ones I've seen are like 4 to 6 feet in length. And yeah, there's been nothing between me and those alligators. They don't really bother me too much. Obviously, I don't get too close. Just, I know we're talking about finance here, but just an interesting side note, I've been to Southeast Asia and seen alligators there. I assume they were alligators. I don't know, maybe they were crocodiles. I know there's a difference, but those, man, the ones I saw in Asia were like 10 to 12 feet long and they were huge. They were like 4 times the size of those alligators in Florida. So having seen those gargantuan things in Asia, I'm much more comfortable with the tiny little 4 to 6 feet long jobs in Florida.
Yeah. That's what you'll typically see. There are rare occasions where there have been sightings of much bigger alligators, but for the most part, I think I've come across quite a few in my time here, and I've been here since 2005.
Okay.
Let me address some of these comments here. David said, just wanted to wish you an amazing rest of your day. Well, thank you so much, David. I wish the same for you too. Happy Friday. And then I have, our traffic isn't as bad as other places. I guess that's true to some extent. I mean, I'm originally from Los Angeles, so I don't know if there's traffic anywhere as bad as LA. But in certain parts, I would say Florida's got its fair share of traffic, but it certainly isn't LA level traffic.
Probably the worst traffic are the lines at Disney World.
Yes. Oh gosh. I-4, you could be driving on I-4 any time of day, and as you approach the Disney exits, you are going to run into traffic. It's 24-hour traffic there.
Are the alligators also anti-vaxxers? That's a good question. Well, I would imagine it's pretty tough for those alligators to find a good place to get a vaccine. So I would imagine they just bypass the whole thing altogether.
Yeah. Yeah.
Yeah.
Let's
Are there
see.
any
Chick-fil-A.
downsides?
Oh, go ahead.
Sorry, I was going to say, are there
Downsides to Florida?
any downsides of Florida? Like, do you ever, I guess you never had snow in LA, but for someone like me coming from the frigid Midwest.
You know, I've heard that the humidity is something that most need some time to get accustomed to. But what I tell a lot of the people that are coming from out of state is that yes, the humidity isn't fun, but the great thing is in Florida, almost anywhere you go during the summer, every business, every homeowner, anybody that's indoors is cranking up their AC. So as long as you're limiting your time outside, it's really not that bad. Being born and raised in California, I had no idea what humidity was or how it felt like. And my very first trip to Florida was right smack in the middle of September, which is like the peak of humidity for us here. And yeah, I remember feeling like I ran into just a brick wall. I was at the airport asking people, "Hey, was there a pipe that burst somewhere?" Because it just felt so steamy. And I quickly realized, oh, this is what humidity is. And nowadays it doesn't really bother me. I think, yeah, you stay indoors as much as you can. And for me personally, I've not lived in an area where it snows, but I kind of know myself enough to know that I don't want to live in a place that snows. I'll visit all day. My wife's family's up in Ohio, so we've made several trips up there, some during the winter where we enjoy the snow, but I couldn't imagine living and having to actually deal with the snow through a season.
I can tell you, we keep our snow scrapers in the car year round. It doesn't make any sense to take them out of the car in the summer because you never know, like, when there's going to be some freak early snow in October, and then conversely some freak late season snow in like April or even May. And since you and I see different comments, I have to tell you, Joyce Lynn Tan, realtor, said, "Hey, Glenn!" exclamation point with a smiley face. So I don't know if that's someone you know, but someone who's saying hello to you. Joyce
Hello.
Lynn Tan.
I don't think I know that person personally, but I've gotten the opportunity. Yeah, I've gotten the opportunity to connect with a lot of agents, really across the country with being on TikTok, and I think a lot of them have enjoyed the silly videos that I make about our industry. I'm just trying to make light of some of the struggles that we face in what we do.
So, yeah, you do I think you have quite a gift for comedy, and yet we're seeing you as kind of a regular person
Yeah.
who's not cracking a joke right now. So have you ever received any, negative comments or any, what's kind of the most positive and what's the most negative comments that you've received on your videos?
The negative has been, I had a video that I actually, when I made it, I didn't think it was gonna do that well, but it was one of the first videos that received like over 10,000 views. And looking back now, I realize, okay, it was a little controversial, because I made a post about how we could be moving towards mortgage interest rates down to 1%. And I had like a whole explanation about global economy and
Oh,
definitely check.
yeah, you're responsible for the capitalistic system going run amok.
Yep, yep. So yeah, that one got a lot of flack. I've had others where people have felt, you know, comfortable sharing that realtors and mortgage people are basically scum of the earth. We're all scammers, and
Yeah.
I treat it much like I treat situations like that in my real life, which is just empathy. I always feel like, hey, if you took the time to respond negatively like that, there's probably something going on in your life, and I'm not gonna feed into it. I'll usually respond. If I do respond, it's usually something along the lines of "Thank you for your feedback," but sorry, we disagree.
Exactly, because their engagement is actually helping your video. But
Yeah,
I get that too. I mean, I started my channel because I thought, well, I have a lot of helpful things to say and I'll teach people about finance. And I naively thought that was a good thing. Like people would say, oh, thank you. And thank heavens, I do have a lot of fans and I truly appreciate those wonderful people. And people who say, yes, you're teaching me how to invest. I'm getting on the right path. And then, as you said, I also get people, calling me the scum of the earth, saying I'm responsible for the downfall of humanity. And
yeah.
I just think, wow, I didn't know I was so powerful. Like,
Oh
little
yes,
old me, I can be responsible for the downfall of humanity.
yes.
I had no idea. I'm more responsible than like any world leader
Yep.
ever,
I
you
know
know?
we've talked offline about the most recent controversy with your
Yeah.
water company post. Um,
Yeah.
and for the most part, I just think, you know, most of it just is understanding
It's
because
misunderstood and it's reacting. And, I think it does give me an education on how to make videos. But I do see for mortgages, I mean, you're doing your job. Someone wants to buy a house.
mhm,
Obviously, buying a house is different from buying like a sweater or a piece of clothing or even a car. I mean, most people don't even buy cars with cash. So to buy a house with cash is like flat out
yeah,
impossible for 99% of people.
right,
Um,
right,
so the question is, okay, so how do they buy a house? Well, they need some kind of a loan. So you come in there and you help them get a loan. You take their paperwork, you go find something suitable. I mean, I see that
mhm,
as actually providing a service and helping someone out. But, you're just working within the system. I mean, that's just kind of the system that we have. If you
yep,
weren't there, someone would have to save up until they had the entire purchase price of the
right.
property.
Right, exactly. And as you mentioned, most are never going to reach that point, especially with what houses cost nowadays.
Yes.
Um, it's just not going to happen. Um,
Yeah.
oh, I wanted to do a quick shout out only because I can see another person that's on here. His handle is the Ultimate Loan Officer. What's going on? Um, he also makes hilarious mortgage and real estate related videos. And truth be told, I got a lot of inspiration from his posts. When I first got on TikTok, I just thought his stuff was hilarious. So it was inspiring. So it's kind of cool that you're on here. Aloha. That's right. He's from Hawaii too. Seems like a amazing place to be working and living.
Seems like it's easier to be in the real estate business in a nice place like Florida or Hawaii than it would be to be in like North Dakota or Wyoming.
Yeah, I would think so. And yeah, there's just, especially just in the last couple of years, everybody's just been flocking to Florida, from places like California, these higher cost places, California, New York. And what I'm seeing is people are realizing that they can sell their homes in a place like California and live extremely comfortably in probably a bigger and much nicer home in Florida. So the appeal to make that move is incredibly high. And I still think for the most part our prices are moving up along with the rest of the country, but I feel like you're still going to get a value when you're looking at the big picture down here in Florida.
Mm-hmm.
A lot of the locals don't feel that way. A lot of them are a bit upset that, maybe they waited a year before they wanted to purchase and now they've been priced out of the market. And, I can understand the frustration with that, but.
Okay. So you don't think the hurricanes and threat of global warming and floods and all that, that's not keeping people away?
I think it'll keep some people away. For us here, I'm in Tampa, Florida, and like there's just this ongoing myth that Tampa has a magical force field around us in this area from hurricanes. Now I feel compelled to have to knock on wood. Um, but yeah, since I've been here, the very first year I was here, we did have four hurricanes come through. That was probably the most active time that had any effect in Tampa. But we've gone through Irma, which was a couple years ago, and somehow just the hurricanes come through and then they hit the force field. So I think especially in the Tampa area, people aren't as concerned about the hurricanes. But if you're closer to, I would say, South Florida on the Atlantic side, I think people are a little more concerned down there because you've got a higher likelihood of being affected significantly from an oncoming hurricane.
Okay. So here's a question. When I have been to Southwest Florida, which is basically every single year except for this past 2021, I hear a lot of Jimmy Buffett. Do you hear a lot of Jimmy Buffett in Tampa?
Yeah, I would say so. A lot of Jimmy Buffett. I think in Orlando they're just opening up a whole community that's a Jimmy Buffett community. So
Oh my
it's like a
God.
themed community. Or no, actually, I think it's called Margaritaville. So yeah, he's very
Parrot
big down
heads
here.
are at retirement age now. Goodness.
Yeah.
You
Oh, and
know,
I
as
want to
much as
thank
I
Brian Tex and Mr. Loan Officer for the gifts. That's cool. I don't
Oh,
think I've ever gotten gifts before, so I appreciate it, guys. And as you know, they're members in our accountability group. So I love that we support each other.
very nice. Very nice. Okay.
How are we looking on time? Oh, that was fast. I wanted to talk about some investing with you.
Oh, go for it.
Um, how Now I've been coming across information lately. It's just strange how TikTok reads your mind, but I'm coming across posts that are saying things along the lines of, "Hey, if you've got, $100,000 in a savings account, this is what you should do with it. You should move that money into an investment account so that you can borrow against it and basically avoid paying taxes on any gains that money makes, and you basically live on debt, which, as a mortgage person, there's always a level of uncomfortability when you hear debt. Um, so what can you share about that? Because I'd love to learn more about how you can earn gains on, uh, you know, on a amount of savings, but also be able to loan against it, much like a 401k, where the interest you're paying is paying back to your own account.
Okay. So, a lot of issues there to unpack.
Hmm.
So, first of all, one thing you might be hearing, uh, there is an idea out there in the world that first of all, there's always going to be financial innovation. People are always
Hmm.
trying to get higher rates, higher returns, lower risk, something. And people are always going to be fiddling around and coming up with something new. And that's not necessarily a bad thing because, years ago, mortgages, for example, didn't exist, and someone had to fiddle around and come up with that. And now we have that.
Hmm.
But so financial innovation is not necessarily bad. However, what I think you're getting at, there is an idea out there of using, for example, life insurance. I haven't looked into this because I don't think it's really worth looking into it. But there's this whole complicated scheme where you use universal life insurance that is life insurance, plus it has an investment component to it.
Hmm.
And you use that as a collateral and you borrow off of it and blah, blah, blah. You set up this whole scheme. And I think that's just way too complicated for the average person. Most people are very busy in their lives. They've got jobs and
Hmm.
families and things to do. So the more complicated something is, the more opportunities there are for things to go wrong. And
Hmm.
generally, when things go wrong in your financial life, it's very stressful and it takes a while to fix. I mean, for example, we talked about foreclosure and short sales, and you said, if someone does short sales, they can't get a mortgage for 2 years. Fortunately, it's only 2 years, whereas if someone is foreclosed on, it affects them for much longer.
Hmm.
So I would say what you're hearing about is this idea, and then someone puts it into a TikTok video. And because you and I are creators of TikTok videos, we know that they're very short. You have to sum up the subject and just put in a
Hmm.
few bullet points. You don't have time to explain it fully. And, of course, you want to mention the benefits. You don't want to you skip over the disclosures and the disclaimers and the downsides. So it's just a tiny snippet. So there were a lot of things to unpack in what you said. One is, I think these videos that you're seeing, they're about the life insurance situation. So I would say if that's what you're hearing, that particular one is just way too complicated. People should steer clear. One thing that really scares people away from personal finance is complexity. So I think generally we want to keep things simple. You do need to have a certain amount of complexity in order to get returns. I mean, the simplest thing of all is throw your money in a savings account, but that's the kiss of death in terms of returns. So you do need to take a little complexity, a little risk, if you're going to get anywhere financially. So another thing is, if you have $100,000 in a savings account, a lot of people say, don't put it in a savings account, put it into XYZ. The thing about personal finance is it's personal. And I believe you may have been on one of my lives the other night where a woman was asking about her down payment money for a house. And someone else in the live said, you should put that in Bitcoin. And I said, absolutely not. As much as I think everyone should invest in cryptocurrency, to some extent, Bitcoin and Ethereum are excellent investments. For a down payment amount, you want to play it totally safe with that money. So, for example, if it's your down payment money, you want to keep it in a savings account. True, the returns are next to nothing, but it's guaranteed. You're not going to lose any of it.
Right.
So a lot of these questions, and maybe I'm running the risk of sounding too wishy-washy, there's a lot more going on under the surface. So we do want to be as helpful as we can on TikTok, and obviously on these lives, we can go into more detail. But ultimately, a lot of things require more in-depth analysis in order to tell someone what the right thing is for them. So, for example, I offer coaching. Anyone who wants more help can contact me for coaching. And for Glenn, he's a mortgage officer, and that's why he works with people. I guess you work with people on Zoom calls and in person and all on the phone, because all of this is a little more complex. Okay, I have two questions. One is, I'm new to stocks. What platform do you recommend, M1 or Fidelity? I actually have an account on Fidelity. I think Fidelity is fantastic. I always tell people Fidelity, Schwab, or Vanguard. E-Trade, TD Ameritrade, those are good too. I'm actually not familiar with M1, so I can't recommend it. But since I'm not familiar, I'm also not gonna not recommend it either. It's just I don't know enough about it. I have another question. What do you think about PayPal offering crypto investment there? I'm new to all of this. Well, PayPal, yes, it can deal with cryptocurrency, but PayPal is a payment vehicle. It's not an investment platform. So sure, if you want to handle payments of cryptocurrency, PayPal can accommodate that, but it is not an investment platform. If you want to invest, use an actual crypto platform. So two crypto platforms that I always recommend are Coinbase and Gemini. And I always like to say Gemini is the one started by the Winklevoss twins who started Facebook. I think they're very smart. Gemini is a very robust platform Coinbase is 2. There's a link in my bio. If someone opens an account on Coinbase using my link, they get $10 of free Bitcoin. So that's an automatic 10% return. Is this a good time to buy crypto? Yes, it is. Now, the reason why I say that, do I think crypto is going to go down? And of course, when we say crypto, I mean, there are actually hundreds of cryptocurrencies. The 2 main ones, of course, are Bitcoin and Ethereum. Bitcoin is almost at its all-time high right now. But I do think it's a good time to buy because it will go even higher. That being said, it will also go lower and you're going to see your investment go down. Are you comfortable with that? But if you hold it for 10 years, the thing is, it's a limited supply. So kind of like real estate is a limited supply, but the real estate market goes up and down and up and down. But over time, it goes up. So, for example, real estate has been super overheated for the last year. It seems to be slowing down a bit. I did hear something this morning about the fact that Zillow has, they're now in the real estate business of buying and selling. They've stopped buying any more properties, and they claim it's because they don't have the personnel to handle the transactions. Who knows? Maybe they think that there's, something coming, that it's not financially worthwhile to buy anymore. I mean, we don't really know. Anyhow, so is it a good time to buy crypto? Yes. And I also recommend you use dollar cost averaging. That just means investing the same amount every month. So that means when prices are low, you buy more. When prices are high, you buy less. I have a video about dollar cost averaging. So hopefully that answers that. So Glenn, do you have any more questions? And I am actually going to have to go in a few minutes.
Okay. No,
I mean, we
really enjoyed
budgeted for an hour. We've gone over, but I can go till about 1/4 past the hour.
What time is it now? Oh, okay. Okay. No, I've always been interested in crypto. I hold just a tiny little bit of it, but I remember reading about it back in 2010. And a funny story is that a few months ago, I wanted to get back into crypto. So I totally forgot that I had a Coinbase account that apparently was opened in 2014. And back then they had a promotion where it was like, we'll give you $1 of crypto. I totally forgot about it. And so when I reset my password and I went back in, that dollar from 2015 that they, gave for free as a promotion had turned into $257.
Oh my
And
goodness. That's
I
wonderful.
was just sitting there like, one, thinking, why didn't I put more money? But then quickly realizing that had I put money in there, I probably would have, sold the crypto once it doubled, or maybe if I was lucky, it tripled, and I would have been out. So it's revealing in the sense of, think of things long term, because even just as little as 6 years ago, I mean, that investment like 250x basically. So 1,000 would have been
return.
250,000 today, but hindsight's always 2020.
We can't do everything. Yeah. If only we knew what was going to happen.
Right.
If only we could team up with these psychics and, get their opinions. And I have another question here. HBAR, XRP, ADA. ADA is Cardano. Mm-hmm. What's my favorite? You know what? I cannot remember what H bar and XRP are, but I think Cardano's a pretty good one.
I think I hold the most in Cardano. H bar is an altcoin that's gaining a lot of popularity. What I understand is it's one of the few altcoins that actually have a usage. Um, and then XRP, I don't even know where you buy
I think that
XRP.
might be the gaming one.
It's something. XRP, I believe, is Ripple, and they're
Okay.
currently in some kind of lawsuit with the SEC or the government.
Yeah.
And what everybody is sort of hoping for is that the case is going to be thrown out, and if that does occur, that coin's value is going to just skyrocket. So a lot of people are just holding it on the sideline with the anticipation that the SEC isn't going to be able to uh, continue moving forward with their case against it, and once that goes away, it'll skyrocket.
Mm-hmm.
Oh, and before we finish, I wanted to show you that I have these
Oh,
books that I'm going
super.
to start reading. And
Fantastic.
yeah, I'm excited about that. I love anything finance related, so it's right up my alley.
Good. Excellent. Okay. Any last words of wisdom before we part?
No, I would say to anybody who is thinking about buying a home, it's not too early to start. What I do for a lot of my clients, if they're not at a point where they're ready to have their credit pulled, I'm more than happy to at least have a discussion with them, answer questions. A lot of times I find that people just have questions and they're not necessarily at a place where they're ready to disclose a bunch of information, fill out an application, and with a lot of other lenders out there, it seems like they won't even give you the time of day unless you're prepared to take those big steps. So I'm just the opposite. I love the educational aspect of what I do. So I encourage everybody I know and my referral partners, if you just have someone that's curious or just has questions and is nowhere near the point where they're ready to have their credit pulled or do anything significant, then yeah, send them to me. I'm happy to speak with them and stay connected with them and help them in any way I can.
Okay. Fantastic. Okay. I think we're going to head out of here, but everyone have a good rest of the day. And Glenn, enjoy that sunny Florida weather. It's
Thank you.
going to be a cool 40 degrees tonight here in Chicago.
Ooh, not jealous
So,
of that.
sweater weather, as they say on SNL.
Yeah. All right, Pam.
Okay,
Thank you
great.
so much.
Thanks.
And thank you
Bye.
guys.